learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvested. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in July 15th, 2020, and the stock market is going to go crazy. The S&P is up right now about 3 points after hours. You can see all throughout the day, this line right here is the previous close line where we opened. We kind of gapped down, dropped below where we closed, came back up, and then throughout the day, this was a pretty big sell-off before kind of the rest of this stuff happened towards the end of the day, but a lot of it had to do with some China news that Trump was getting ready for. So now that happened after hours, but also after hours, we got to bring up Moderna. So we talked about this on the Thursday watch list. We made a play, but it's actually a very interesting piece of news. They had results after hours that they produced antibodies. They said it was robust results or progress, whatever you want to call it, but some people are talking about this being kind of the same data from a few months ago and that it just hit this study today. So we will see. But a lot of this fueled stuff after hours. You saw a weird effect with other biotech stocks. We played some biotech stocks. So this is very interesting. Like we said yesterday, the market's going to move like a biotech. That's why I'm telling you about Moderna's news right now so that you could get ready for tomorrow, because it's either going to go crazy and have a big move, or a lot of the move is going to happen pre-market and then it will either chill out and do nothing, or kind of reversing that as we've seen on some of these vaccine days. It could still be a pretty big day, but we got a lot to talk about. I got the plays, I have the keys, everything else coming into tomorrow. It is going wild, so let us not delay. You guys know what you need to do. Drop your thumbs up on the video, make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. youtube.com/the stock market. You could post the plays, see the plays, watch the watch list come to life, and you could learn about economic concepts like crony capitalism, maybe get put onto the FDA drug cycle product. I meant to say cycle, but yeah, you get a lot of things. Hopefully we see you there. Just keep it positive and respectful. Thanks, bud. Don't be a little John Nathan. And the most important thing you need to do, post or watch this below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that information. We have a lot of eyeballs. A lot of you are posting some of these plays throughout the last few weeks, so shout out the cult, baby. But right off the bat, the first thing is this Moderna vaccine. This is what caused the move. So after hours, although the market popped, it popped on this vaccine news. So like I told you guys, it could potentially be a recycling of news, and a big point to notice, it's having a balancing effect on the biotech. So you'll notice some stocks like INO and even NVAX, or some of the other ones, even VXRT, they started to fall after hours because Moderna is becoming a lead candidate. We talked about this in the risk of playing all these biotechs, but we could discuss that when we get into the plays. But the main thing here is how it's going to affect the market. Again, we've seen this over the last about 5 months at this point. Any vaccine news, or really since March, it has popped the market. It has stabilized the level, and then it has kind of even sold off, but it leads up to something. So I'm expecting crazy after-hour moves, even crazy pre-market, and then the real question is going to be, how does the market respond? What follow-up information? Usually when we get this overnight with the vaccines lately, again, it's kind of funny. We've become a lot more versed with this process now, because chances are by morning, you're going to get 3 or 4 different news sites, professionals, people like this. They're going to rebut it and say, no, this study wasn't this. It was old, this and that. So depending on kind of how it holds up, and now also earnings, that is going to be important. But the market is moving like a biotech. This is what we meant yesterday. Again, you got positive news. They said it showed robust results and that it produced antibodies, but watch how this plays in with the other companies. Even travel companies started to go up after hours off this too. Travel stocks, casino, all that. It's actually going crazy on my high ticker right now. But that was the first thing. And then now after hours, again, it kept the market up. These are what we saw these little blips on. But the next piece of news that was pretty big after hours, again, we should see this. It came off today. Again, China sanctions have been increasing, but this was important, but it was still kind of old. So he signed the Hong Kong bill. It's already been passed, I'm pretty sure, but it's going to treat Hong Kong like China. And this is going to include those bank sanctions and sanctioning certain people and banks from working with them. So watch those bank stocks, but also this could impact trade and currency. Pretty much the bill is Hong Kong is now going to be treated like China. It hasn't always been like that. We've treated them like Hong Kong, not the same. So now it's going to change some trade dynamics. Again, we will see really. Now, that's why I think currency and all that stuff, but it's going to happen at a longer run, but we'll see how China responds. However, I'm not really taking this as a meaningful escalation, and I think the market isn't either, and that's why I think most of it will be the virus tomorrow, but we will see. But now, finally, you saw what happened yesterday. You see what happened today. The Dow surprisingly closed up 556 points. You're seeing this after hours move, but this was looking like an earnings move. So pretty much you guys saw it run up, run up, run up. Individual stocks, even if the market held a level, premiums went crazy. And then what happened? Market finally dropped off. But now the fact that you stopped a consecutive 5 to 7 day run up on stocks like Amazon, Tesla, anything like that, the premium got clapped. So you notice that today, some of these plays that we took profit on yesterday, the stocks came back and even went higher than where they closed yesterday, but the premiums didn't go back to that level because now the momentum has changed, the velocity has changed, and now, therefore, it has changed the expectations of the market and other investors. So that's what you saw. You saw the premium get clapped. This was a normal earnings run-up. You're going to see this in phases, so pay attention. That's what I'm saying. Now watch for part 2 of the run-up. So what you're going to start seeing is pretty much after a big company hits or after a big industry hit that surprises or confirms something, then the next wave of premium run-ups for the other companies that report in a few weeks, then those are going to hit. But in the meantime, in between times, you work your thing and I work mine. That was weird. If you know, you know. But we're going to have to wait to let some of these companies report. Again, you're getting the banks and healthcare or some of those. You're going to get UNH, I believe, tomorrow or Thursday morning. And then you're going to start getting some of the techs, Netflix, and all that next week. So play the weeks accordingly. Balance the budget. Be smart. I hope you've been doing good. Hopefully this makes sense and you're learning. But let us get into the plays. So right off the bat, a few different things that we need to go over. I had 2 different plays that I made today. Or 3 that I made. The ones I like the most because they held premium. Even though it was a red day, they were a little cheap, and still the stock outpaced Amazon. So I got Amazon puts. Again, I've been telling you guys I'm kind of preparing for the Grim Reaper. I got Facebook, I got Microsoft, I got Apple. I haven't got Amazon. Amazon's usually a little bit more expensive, and we did end up spending a little bit more here. So I did 2 for 2 different reasons. One to cover earnings, and then one to kind of even get exposure if it really started to sell off fast or quick, or even coming into earnings and everything kind of decreased more. But the first play I got was an Amazon August 2100 put at 765. So a little expensive for this. Probably the same, again, I had like $700, I think, in calls on Facebook. So I wanted a big one, but depending on how this plays out, if it goes up a lot, my idea would be, that's why I got 2 of these to give me some wiggle room if I could decide which one to roll out of if it gains premium coming into earnings. So I like that. I'm going to be holding that close to earnings. I'm not going to touch it until before earnings, or unless the contract moves a lot in value and it would make sense to roll over and switch it out. But then I also got here Amazon July 24th, and next week, $2,300 put, 178. Wanted to get one for a little bit cheaper, and we talked about this on live stream. You can see how I snake the chain, or really with some of these stocks, you got to really be careful because Amazon is expensive. Some of you guys are like, these are really expensive. I can't play anything good. Even to get $1.78, it's still expensive, but some people are like, wow, that's cheap for Amazon. How do you get something good? This is still, I think, 2 or 3 standard deviations outside the money. It's not a high probability, but if you don't know how to get filled on one of these companies that's $1,000 plus and it has a $100, 100% spread pretty much, a lot of you could end up getting for the same $178. If you go on the ask, you'll end up with like a $1,000 put. So the idea is look at the last trade. Keep that in mind. I would strongly, again, if you even go to the live stream within 20 minutes of today, you could watch me explain this because this could save you a lot of money and you could see this live. So that was the first play. We got those puts. Then I got some BABA. Spent about 400 here. I got BABA September 155 puts. I got 10 of them at 43 cents. Logic here is, again, BABA Black Swan, and the fact what kind of made me justify it, some of just in case there was Hong Kong escalation or if it was bad towards China, but I was kind of already expecting what happened, so got it just in case, but then that would even cover their earnings. And then finally, The last play that we got was UNH. So I grabbed a July 24th 260 put. I grabbed them at 60 cents. I have this small Robinhood. I sold out of the call. We had the 330 for earnings. I sold out of that. It was like $200 or 200%, and I got like $70 or something from it, but I wanted some cash in the small account. I still have the 10 calls, but I was like, well, I don't have any puts on it. I have an older put that's pretty much collapsed, so I said I'll get a next week $60. Just got one just in case if there is a surpriser, because again, with this earnings season and given where the market is, if there's any moment or any year the market would have random surprises, it's going to be in the next 2 quarters. So I could justify these, but be careful. If you do a bunch of these will add up and you will still get clapped. So those are those 3 plays. And then finally, we talked about it. I'll switch even to the Robinhood, but here it is, NCNO. Encino, it's like a bank software company. They IPO'd today, and a lot of you have heard me talk about my IPO criteria. It kind of hit everything on that today. But the only problem was the IPO was up 100%. So that means the company decides to sell their stock. They would decide to go public. They say, we're going to sell it at $30 a share. And then all the banks on Wall Street say, okay, we'll buy it. They buy it all at $30 a share. And then they sell it to the retail market. So then it opens up at 70. So that everybody, the banks double dip. They go crazy off you. That's just how it works. So usually if the premium, the fact that this company was offered at 30 and opened up at 70, it was up over 100%. So that doesn't meet my criteria. However, it hit the criteria of an IPO trading 50% of the float in the first 10 minutes. So I said, I'll do it. I justified it. What I ended up doing was I grabbed the 100 shares of it on the IPO. So we ended up closing up $1,200. We got it in at 78.42. So I like it. I was going to sell out and take free shares, but I flipped the coin. It told me to hold. So the idea of what I normally do, my exit, I'm going to be watching for this tomorrow. But again, if it does good, I mean, maybe we do long-term this. I don't know. But I am going to be tempted. My exit plan for this, and I've already kind of reached the target here because it's large enough and the initial trade was large enough. My idea is sell back the initial investment and then get free shares for the rest of my life. This is what I used to do in 2015, and I've actually built a whole entire portfolio off of this. So some of you guys are 2014. Some of you guys have been with me that long. Some of you have known me then. You've seen this. This is called the free share method. This is where free options and free earnings originated from. So in this case here now, wow, only 1,300 people on Robinhood own this? Okay. Wait, no, that's an IPO. That's why I was like, wait a minute. But wait, that's the Colt prop. The total cost was $7,800. So what I mean by free shares, really think about this. It's a brand new company. I didn't own it today. I bought these 100 shares. I spent $78.41. So now, assuming I get this $90, let's say we sell it out at 80. No, I'd have to do more, maybe 85. No, maybe a little bit more, maybe 86. Okay, one more, 87. Boom. So if I sell these out right now, if I sell the 87 shares at the current market price, I would receive $7,916. But what do you notice? That number is higher than what I paid. So if it's only 87 shares, we will have 13 shares of the company remaining for free. So I'll just get to hold those shares. It's equity. It'll never expire. And I'll give those to my kids. And then voila, there you go. Or you wait if it does hold up. And this is another thing now. If I don't want to do it, what I could also, if it shoots up a lot and gives me a lot of cushion, I might be down to hold it till options come around if there's enough activity. And then we just sell covered calls. So that was the final play. Again, watch how this one plays out just to even see how the IPOs move. And then finally, again, I got a few other stocks I want to look at for earnings. Those were the main plays, but the main thing is going to be watching these biotechs and seeing, because this is either going to spark another event. Another thing I was considering, again, we've been talking about all of these. So if you're only watching one video and watching one of these biotech plays, I encourage you to try to come on live stream and ask and have me explain it, or watch through the past watch list so you could understand. But I'm considering the bio sig again, maybe add more, but I want it to drop more again. You guys saw with Vaxart, we dropped 50%. So at that 50%, I just started big on my first position with Vaxart, so I didn't average down, but that's what I'll be waiting for. But if it doesn't go down, I'm not going to buy any more of this. So watching that one, but then the real thing is going to be Vaxart. It shot up again. You guys remember we bought this. It dropped after hours, so they were even up at, I think they closed at like 7. I think they were even up towards like 19 or something. I don't know, but we were up like 80, 90% on it. But now they came down after the Moderna news. So my plan with this, I want to keep holding. It was up a lot today, but I was looking for the covered call. So there was some available, but it was at 25. The way it's moving, I wanted to wait till more options were available so I could sell a higher strike price, because I said this the other day, there's going to be a few more months of this. So the real risk is if any of them fail. So it's not like these are all home run bets. It's not an easy bet. It's a game of literal musical chairs. You see this overnight news, boom, Moderna comes out, it rips up, but then it's going to cost some of the other ones. So I'm bringing all these up because this is the reason why the market, this is going to be fuel for tomorrow. But now I brought this up. You guys remember we did this last week. I wish I didn't sell. Remember I sold the graveyard Modernas. That was sad. But what did we buy last week? We got that August 90 call at 275. So that thing right here, right here, it's going to go crazy. We bought that at 275. It's at 540. It hit $8 the other day, but now you got till August, and it clipped being in the money for a little bit or right below. So going to be riding that out, maybe ghetto spread or roll that. But hopefully you could see this is why we're getting these different biotechs, playing them all in this way. But there is a real risk. You've seen them get hyped up, and then once the hype dies or if any news comes out, you get clapped. So don't underestimate that. Be smart. Use your oxygen level, cash balance, net balance, and, well, be smart. But those are the main plays. As far as everything else, I'm going to keep an eye on Netflix coming into earnings. Like we said, Microsoft, Facebook, we have those. But now watch HSBC. We have those old puts, but even watch the banks. JP Morgan did good. Wells Fargo got clapped, but they kind of had weird moves at the end of the day. But HSBC, that is going to be related to the China stuff. So notice how it's moving and how it looks. It looks like it looks like Deutsche Bank back in 2015-16. So that means it could get clapped, but it's going to get clapped in a really, really weird way. And it makes it very, very hard to profit off of, honestly, unless you just short the equity. So I don't know if I'm really down for that. It's a little too much risk for me. So we still have that old September put. That's about it, but you could keep an eye on them. Then watch all the vaccine ones. I'm watching Biogen again. If I want this, if it drops more, going to watch the Modernas. I think that's going to be a really big play tomorrow. Again, Vaxar, I want to see how it reacts with everything. And again, I really want to see who's going to be a winner and loser given how the market responds to Moderna. Watch INO. They sold off after hours again. So you're seeing that balancing effect. And then watch UNH. So they've been killing it. I still have those 10 calls. I only sold the small account one just for cash balance sake, even on the small account. So you see I'm holding it on my big account because I already have that one balanced out. But my small account, I held one of these UNH plays, but I only had $30 in cash. It was going up in value. I was like, I need cash. So it reports. If they report, I would lose that value. I didn't want to risk it. I took it on the small account. So hopefully you guys could see there. And then finally, watch TLT. They really got clapped after hours. So again, this is telling you something. And remember, with how TLT's been reacting, a big drop would make sense. And then, like I'm saying, if the bonds play along and the bonds start selling off, I've said this the week before that, but if the bonds start to drop and really run up off this news, it is going to go crazy. That will be a lot of juice and steam for the market. So be careful, be excited. I don't know what it is, just there it is. But watch TLT with that. And then finally, Walmart. I still have those January plays, but then here is another interesting fact. Remember these Walmart August? Well, take a look. Walmart is pretty much at like the high level from yesterday. But remember those same August contracts, and this is what I'm trying to tell you guys with the premium. I sold 5 of these contracts at like 211, and then I even think they went to like 250 or something. But they're still not the same price, so it's not as bad. But the January contracts really came back, but we still got our hand in the cookie jar. They're doing good, but again, Walmart reports, I think, next week, but they're at an interesting spot. You saw HD. I would keep my eye on them, and McDonald's as well, too. Those contracts came back, but other than that, I'm expecting some action tomorrow. And if it doesn't happen tomorrow, it's going to happen pre-market. So understand what I mean by that. Get prepared, be smart, control the balance. Don't forget this is earnings. And hopefully you can put this in your memory bank moving forward and when next earnings comes around. But there's a lot of moving parts. It's difficult, so stay in the game. Don't force it. Don't rush. Let it come to you. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And remember, doesn't matter what you sacrifice if you don't follow the rules, baby. Obedience is better than sacrifice. Follow the rules of gold. Follow the rules of wealth. How to make and grow money. If you break the rules, well, then you might have to sacrifice, baby. But the cult loves you. I love you. And we'll see you in the morning. Let's go.